expert called on renewables in Africa platform. Impact investors, they have raised impressive sum. But now come the real test. Swiftly deploying these funds to qualify deals, advancing equal opportunity and sustainable development. This is not an easy thing. And today, I'm actually joined by somebody who's very experienced in impact investing. So she's a leader in her own capacity. So Kiran Sharma. And I want to have an incisive discussion on cracking capital deployment bottleneck. And what we're going to be addressing is different obstacle, inhibiting the efficient allocation of impact of funds to shovel-ready social enterprises. Because, there is winning capital waiting to be invested in promising ventures, tackling pressing global issues. Talking about global issues, tomorrow, as you know, we're going to have the start of COP28. Yet, often, there is a disconnect in the marketplace that sort of prevent those impact funds from reaching viable social enterprise poised for investment. So this is why I want to have the conversation today. We need the money to reach the right people. So I want to explore how we can talk about fixing the connectivity, the creativity, and education, and bridge the divide between the ready capital and also the eager entrepreneur across the global goals. So how can we foster better alignment through technology? What kind of creative financing solution we can have to accelerate those deals? And how can we cultivate more investment ready social enterprises? So this is really the topic that we're going to have today. And I'm very, very happy to welcome to the stage. So Kiran, can you hear me well?
Yes, I can hear you very clearly. Hi, everyone.
Hey, how are you?
I'm good.
Excellent. Well, listen, Karen, so before we dive into the conversation, I think it could be very helpful for people to properly understand. So, who you are, if you can just introduce yourself, a little bit about your background, and before we can dive into this very interesting conversation, please.
Sure. Hi, everyone. I'm Kiran Sharma. I'm part of investments and portfolio management team at Axion Emerge. Erstwhile, it was known as Axion Global Investments. And so Axion is a global NGO trying to drive the goal of financial inclusion across the globe. Axion since last 60 years, Axion has invested in about 235 companies in across 75 countries. And we primarily believe that, financial inclusion is one of the key tools to eradicate poverty across the globe. And like we have supported tens and millions of people through our endeavors and initiatives. Further, Axion tries to drive the goal of financial inclusion primarily through key three levers, that is consulting, investments, and think tank. We have a think tank wherein we try to drive the agenda of financial inclusion and create awareness about it. I'm based in India. I primarily see companies in India, Southeast Asia. So yeah, and I have expertise in emerging markets.
Excellent. That's very good. I'm sure we're going to be tapping into your experience. And thank you again for making the time, to speak to us this morning. It's
Sure.
morning for us. For you, it's already late
Yes,
afternoon, almost evening, from what I'm
that's right.
understanding. Yeah.
Correct.
So I have a first question for you. So according to you, so what kind of hurdle and misalignment would you say is standing out, when we're looking at the roadblock to converting impact into investment deployments? What are the misalignment there? Would you say you see?
Sure. First things first, impact investments is a pretty nascent stage. It was way back in 2007 when the word impact investment was coined. Just wanted to give you a background. But key things, which actually are contributing the challenges that we face in deployment of impact funds across the countries is one is risk mitigation of countries. So we need to have countries where there is a stable government, there is transparency in terms of reporting, there is good public administration. Now, we can see these companies in emerging markets, but slightly when it comes to frontier economies and as well as emerging economies as well, sometimes getting the political stability, it can be very difficult. So in that case, it's a challenge for us. But at the same time, it is impact investments and emerging economies and frontier economies are our target. So that is one. Second is robust pipeline of portfolio companies, right? So we need, uh, like I said, it's a nascent segment, and even in that, we need to source really quality companies wherein we can invest in mission-driven entrepreneurs. So trying to get those companies across, take it for example, whether it's India, Pakistan, or for that matter, Vietnam,
Mm-hmm.
right? Getting the right company, getting the robust pipeline is slightly difficult, because we want the capital to go to right people, and which will have a multiplier effect. So that is one. And another one of the biggest challenges that we face is our exit strategies. Like I said, it's an impact investments, and like everybody knows that impact investment is social development with financial return. So we also need returns, and when we try to plan out our exit strategies, it's primarily through either IPO or a strategic sale or secondary. So in it gets difficult in certain countries where we need to have attention of those bigger investors. So take it for
Mm-hmm.
example, if I invest in early stage company or a series A or a series B company, there should be an exit avenue for us.
Mm-hmm.
So I feel there are many challenges which are there, but according to me, these are three key challenges, which are the hurdles wherein which are required to be deployed to countries and people where this capital is needed most, and it's urgent also.
Okay, excellent. Thank you very much for detailing that for us. And clearly, those hurdles that you clearly mentioned needs to be tackled. And I must admit, it's not that easy, right? But obviously, the people just doing that. So, my second question for you: can you maybe point to any specific deal where would you say the deployment was stalled or failed because there was a potentially mismatch in promising the impact in the impact that was promised and obviously what the delivery was.
Yeah, we had, in fact, there were two deals which happened that way. So one particular deal was in certain emerging country. I'm sorry, I cannot name it
No problem.
because,
Okay.
yeah.
That's
But this company was a microfinancial institution, plain vanilla traditional MFI, very good company. It had above average growth rate. Its cost structures were efficient. You know, it was poised for good scale as well as profitability. The challenge that we witnessed over there was the country it was present. It was very challenging. The political situation was very challenging. Riots were very much rampant, which sort of gave us discomfort that even in spite of having good team,
mm-hmm.
you are present in high growth sector, there is a huge possibility of growth. Still we were not able to invest in that particular company, and honestly I feel so bad about it because the team was so good. But that being said, after there were certain developments which happened for which we were not comfortable about our investments. We have tried to support that company through other avenues. Maybe we can consult them at a concessionary rates or some other, help them to get some grants. But as a capacity of an investor, we won't be able to do that. So this is one example which I would like to give you. Yeah.
Okay, excellent. Okay, that sort of makes sense. So another question for you that I have: so what kind of innovative fund structure instrument have emerged, would you say, to sort of facilitate the quicker capital deployment?
Yeah. So, like I said, the challenges in terms of exit strategies as well as in terms of target of deployment, there are various innovative fund structures which has evolved over a period of time. Even though the field started from 2007, but there being said, there are certain fund structures. Like I would like to give an example, something called catalytic capital, wherein a fund, what it does is it earmarks certain portion of its funds for the anticipated loss. Like we anticipate that this is going to happen, and you will anticipate that particular loss, and there is a guarantee for that. So that is one. Another is revenue based lending. So it's not a lending, but it is financing, my bad, wherein we will structure the deal in certain way that after the company has achieved certain scale, x portion of that company will come to the investors in order to maintain our IRR, or whatever returns we have committed, we'll be able to get that. Another interesting way to deploy impact funds is, I recently like this thing, is corporate impact investments funds. So these funds are at the intersection of CSR, are aligned to the company's goal and mission, as well as sometimes it's corporate development goals and venture investments. So when we combine these three fields, and there is so much, and there is certain funds which is available for corporates for donations. So why not, put that money into investments? And especially I would like to say, for countries like India, it is mandatory to put 2% of your net income in donations. So it gives them a avenue to uh, to put their funds in the right places, where there is a multiplier effect, there is a compounding effect, there is donation which is going, and we are supporting certain causes, but this is also, it's a win-win situation for all the stakeholders.
Okay, excellent. Thank you very much for that. So, talking about that, let me just ask you another question that's obviously occurred to me as you were talking about the innovative structure that we can see here. How much does the lack of data quality or maybe the visibility across the fragmented impact ecosystem undermine actually efficient matching?
Well, I would say, data quality as well as data is lifeblood for us investors. The
Yes.
quality of data depends, our investments depends on the credibility of data that we received. And sometimes, we have to check it. You really have to check it, whether this matches with that, this matches with that. You have to get your comfort on that. So yes, it is a real challenge for us, and this is also one of the reasons there is slightly less deployment for impact investments. That certain data is clear. So take it for example, number of female employment, or
Mhm.
loans like in MFI, loans given to female marginalized or underserved females. It's right there. You can easily see the cost savings through renewable energies, but the trickle down effect, right? So I have given a loan to take it for example, just INR 20,000 to an underprivileged lady, and
Mhm.
because of that loan, she has started a small business, and because of which she is able to send her kids to school, right? So, and there are multiple cases like that. We are not able to capture this data, where exactly you will see the effect and the rewards of impact investments. So yes, it is a challenge. Basic data is available, but certain trickle down data, we have to work through innovative ways so that we can quantify that amount, that this is the impact we have, this is the amount of impact we were able to do. This is the number of lives we have touched. So this is something, according to me, is there. But that being said, I guess GIIN is trying to slightly standardize it. There are impact standards. They're trying to have impact principles, wherein there are certain information and data that needs to be all impact investment funds. They need to submit it, and we are trying to do that. So yeah,
Excellent. So, based on that, obviously you'll be talking about the fact that the data is like lifeblood for you, and I agree with that, right? And it's the same thing for many industry.
that's right.
So, how can we then leverage technology solutions and improve the connectivity to help investors to not only identify but also conduct due diligence on promising impact investment deals?
I think so. There are a lot of developments which are happening for us investors in terms of these sourcing, which is there. There is a huge application of artificial intelligence also, which is there. So that part is there. There are platforms which are available where I can put my criteria, that this is a requirement I have. This is what I have, and try and get companies which is aligned to my investment thesis. So that is one thing, which is the easy application. It's a low hanging fruit for us, which is
Hmm.
which is available in terms of data. But other things, I think there are lot of investors, they also have developed their proprietary platforms, wherein there are certain indicators you could it, and you'll be able to know that this is the segment I need to target. So I guess that's where data will help us as an investor. The key contributor for us will be, it will help us cut the noise,
Hmm.
right? To eliminate, so that the potential company, the right potential company that deserves the maximum amount of capital from us, comes forward. I mean, that's where the applicability of data is.
Okay, excellent. So that's I have a question for you, because when we talk about impact investment, usually we seen two world merging together, right? So we have kind of we could say the philanthropic funding world. We also have the traditional, typical, for-profit investment. I don't know if for-profit is the right word. I don't. We probably have a better name for that, because you're much more experienced than
No,
me.
you're right. It's for profit. That's right.
Okay, so
Yeah.
according to you, how can both worlds learn from each other? Because impact investment is fed from both these guys. So what can they learn from each other to make sure that they can properly work alongside one another and to develop better results?
Yeah. So one point, the right word would be profit with purpose or profit for purpose. That's aptly defines impact investments according to me.
Mm.
But yeah, both, I am at the intersection of these two fields, and I feel what philanthropical institutions can learn from us is quick decision making, thorough due diligence, and execution discipline. I think these are, things really move fast in our world. Things move fast in startup ecosystem, and things move fast in VC ecosystem. For all practical purposes, we are a venture capital fund. It's just that
Mhm.
we cater to the bottom of the pyramid. We cater to the underserved segment. So these are certain things I feel the philanthropy and the NGOs can take from us. And one thing will be execution discipline. That is one thing that needs to be there, and quick decision making. The thoroughness is also there. So that is one part of it. And what we can learn from them is, I guess, patient capital. Like
Mhm.
certain things, they do take time, and you have to be patient. You have to put in certain money. In fact, certain amount needs to be earmarked for those initiatives which will take time, right? So we are right now, our work has become much more urgent as we speak.
Mhm.
There was COVID-19, there is climate crisis happening as we speak. So, and there has to be a balance of long term as well as short term. So when it comes to long term initiatives, I think in terms of patient capital and also identifying certain research and development projects that needs our money, I think that part we can learn from the NGOs. So yeah.
Excellent. So let me ask you a question. You know that obviously nobody can ignore it. COP28 is starting tomorrow, and
Yeah.
usually there's always huge expectation and also huge disappointment in the end. We're hoping that this time it could be different. But imagine if you had one magic stick, right? And you could fix, one stubborn bottleneck that is actually sort of slowing down the deployment at scale of impact investment. So, what would be that one thing that you would want to fix so that thing can go faster? So, what would you want to communicate to those people of company to say, if you focus on this particular thing, I think we could move a lot faster? What would it be?
Sure. So I feel there are two things I want. I'm sorry, I'm going to take that liberty. So one will be, like I said, one of the key challenges that I am witnessing over here. Like I really want to support certain frontier economies. I want certain that needs to be certain robust framework where there is a quality pipeline of companies for me to evaluate. These are the five companies, and I'm comparing them, and there is certain reliable and credible data based on which I can take a call. Because sometimes I do like this company, I everything is aligned, but then there is an issue of credibility or certain things which you are not getting a comfort. Like I gave an example earlier. So a framework wherein a very good vibrant ecosystem, which I think now I can vouch for India. It's the biggest ecosystem in India.
Mm-hmm.
So governments and governments initiative to support them, the startup ecosystem, that would be, it is not a silver bullet, but yeah, it will move the needle for us, that's for sure. And another thing is, I think so, in terms of, yeah, how do you capture the data and the impact? Because once you quantify the rewards and the results, and you present it in a manner where people can understand the effect of it, I think so that there's going to be more capital which is going there, and the industry will flourish more, and ecosystem will go in right direction in much more rapid manner, or a faster pace. So yeah.
Okay, but now, okay, I think I have a little question regarding that. I may want to challenge you a little bit on that. When you say that we need to look at the data, and the data can definitely support people investing more into impact investing, isn't it? Sort of what you're saying. But what about if those data basically showing to people, because at the end of the day we need to drag more investment into investing, so that obviously we can
That's right.
deploy a lot more projects. But doesn't it mean that first of all we first of all also need to change the mindset of a lot more investors, so that they will consider putting their capital into the pool or impact investment? Because the data can show two things. The data can show that yes, there's a big impact and things are happening on the ground. That's great. But it can also show that why those things happen on the ground, the return are very poor for this guy who wants to hold the money. And if the return are very poor, they may be saying, okay, I'm not that interested. So that's why I say, how do you actually tackle that bit? Because the data, yes, but it can show two things here. I don't know whether I was able to convey the idea.
Yeah, that's right. You have touched the right point over here. That sometimes uh, the intention of not to invest in these sectors, because, like, okay, my return is going to be in less. But unlike there are if you'll not believe, so there is, in terms of deployment of commercial capital, there is a decline, but impact investments are increasing. In fact, on the return part as well, there are certain impact investments they are doing at par with commercial VCs. In fact, some are doing better, and this is not a minuscule portion of the impact investments. It will be a majority of it. It's not, okay, it's just one or two, or it's just the 10% of the sample. No, it's not like that. It is material percentage of impact funds who are driving returns which are at par with the commercial VC. When when we try to convince them, then I
Hmm.
think so, this will be a game changer for us, that the whole perception that my returns are slightly lesser, that needs to change. And maybe, as we grow, like I said, started in 2007, the word itself was coined in 2007.
Hmm.
So, as we evolve, I think so that perception will also change.
Yeah, I think I agree with you. That's what we're hoping for. So let me ask you one last question, because you've been very good with me. So going to all those questions that I had. So on a much more personal note, obviously, I would argue that you are a successful woman. Obviously, for from India, if I'm correct, right? So yeah,
Yeah, that's
for
right.
okay, that's correct. Yeah. So what kind of unique opportunities and challenges would you say are identifiable and to your career and to the background that you had? So what does it give you as opportunity and challenge, being from Southeast Asia?
I think being in investments, it has given, yeah, it is a lot of opportunities, challenges, but above all, I would say happiness.
Okay.
So opportunities in terms of, so when you are present in emerging economy, or you can, there are certain things you can directly link with it, which you understand the consumer behavior much better, and you can actually match it with, maybe, so if it's India, how do people in Indonesia do, what are their habits, and for that matter China, and for that matter Philippines, or to some extent we have companies in Africa as well. So there are certain patterns which you can identify, and accordingly it helps me to identify the right business model that this will work. Some,
Hmm.
one example which I would like to give: you cannot go completely digital. You need to have a personal presence when you
Yeah.
target to the bottom of the pyramid. You need to build trust with these people. So, these are the things, me being in Southeast Asia, that really helps. Which my counterpart who are in US or Washington, sometimes, because they're not there on the ground. So that is one thing which is that I would say an opportunity for me.
Hmm.
In terms of challenges, I would say yes, it has been, the industry itself is skewed, I think so. Even now, when people are trying to recruit a person in investments, I think 90% of candidates are male, only 10% are female. So that's where the challenge begins, and there it is difficult sometimes. you know People don't believe there is a lack of credibility in me as well, that
Hmm.
will this person be able to drive an investment of maybe $10 million. So that part is there, that challenge is always there. But that being said, I think so. This industry is also very much respective about females, and there are a lot of opportunities which are being created for us. In fact, I also volunteer for an organization called WinP, wherein we try to help people that how to
Hmm.
get into impact investments or VC investing, because the field itself, it's slightly difficult to get into this field. So we
Hmm.
try and help them and groom them, that if they want this opportunity in terms of internships, guiding and mentoring, we do that. So yeah, that's pretty much it.
Excellent. So, just my final words. I'd like to give you 30 seconds to a minute. If you had to convince people to get involved with impact investing, what is that would you say? So, just one final word, just to encourage people to look at the sector a little bit more. So, I'm just going to go on backstage and leave you the whole floor for you to make your pitch.
I don't know. Wait, let's just give me some time to think through it. Well, impact investments is a combination of social development, financial returns, as well as it makes you look cool. So I think so. It's best of both worlds. You're somebody who's an important decision maker, who will make a high impact decision. At the same time, you are making somebody's life better. You are contributing. You are making this world a better place. So yeah, I mean that would be my pitch.
Excellent. Thank you very much for that. I think that will hopefully convince a lot more people to get into impact investing, and that will be thanks to you. So, Kieran, that was a pleasure for me talking to you this morning, for you taking the time. I think we learned a lot more about impact investing. And yes, the challenges are huge, but also the opportunities. But I'm sure we're going to have the chance to develop it a little bit more. So, thank you very much for your insight, for your time. And then I'll speak to you another time. Thank you very much.
Likewise. Thanks for having me.
Thank you. Thank you very much.
Okay.
Okay, you had a very insightful conversation that we had. You hear me talking to Kieran, and I want to recap just few takeaways from this discussion. There was a lot, and I'm sure you've been taking some few as well, right? But the few things that I can think about is, first of all, I want to talk about the technology, the connectivity solutions that can really help investors to identify and evaluate, the qualified social enterprises that are ready for capital injections. You have online database, digital profiles, streamlined diligence processes, a lot more. And also, I want to talk about in second point about the creativity, the blended structures, and also the revenue-based investment and intermediaries that could be used to bridge the gap between enterprise maturity, but also the investor returns profile. That is something we cannot neglect, and it's good to be able for us to take that take that into account. And I just want to finish off as well talking about a third point, which is all about investment readiness. We need to have entrepreneurs, communities, that know how to present program to investors, to enable more social ventures to cross that threshold, from the outside investment into the investment. Yes, there are a lot of roadblocks, but they can do that. The challenges are real, but the opportunity are even greater. The impact capital can really empower talented entrepreneurs taking on, the world's greatest social and environmental problem, be it in the African continents, in Southeast Asia, or even in Europe. Why not? There's lots of challenge that could be tackled. But if we work together, we definitely could achieve that. And for people like Kieran, and I'm sure we can move the needle further. So thank you very much for your conversation, and I'll see you for another time. Take care. Bye bye.